Maverick Traders. This is Rob Reinhold. I'm joined by Darren Fisher, and this is the Trading Room. We just wrapped up June's monthly options expiration, and I can't wait to do all the accounting because I think we had some traders with some really nice profits this month. So we will be doing payouts on Tuesday, but let's go recap what kind of happened last week. Last week was a big week, and I think there's a couple things in here that I can't say change the market because the market already changed months ago. The market got very, very bullish, which the market is always a forward-looking indicator, and got way more bullish than all the data suggested. So we got another up week this week. This is on top of up weeks for really the past 5 or 6 weeks. The market just keeps on going. We did hear from the Fed, and they kept rates where they were. However, in their forecast, they actually revised up the economic growth that was going to happen. They said, hey, the economy is likely to be even stronger than we think. They raised growth up to 1% GDP this year. Now remember, where we were was there's a recession coming. This is where the market has gotten its strength from. They had priced in a recession, and it doesn't look like this recession is actually going to happen. Now, Darren and you and I always joke about this mythical soft landing. A soft landing where the Fed slows the economy down to the sufficient amount to curb inflation, but doesn't send it into recession. Most of the times it's failed at that. What do you think, Darren? Is this the time they get it right?
You always wonder. I mean, there's a first time for everything. And a broken clock is right twice a day. So this little period of the Fed poking its finger into the economy, this probably has the biggest chance to actually be that mythical soft landing. But until I see a unicorn up there with Chairman Powell on the stand, I'm gonna keep my own counsel on this one.
That will probably be a meme at one point in the future, Darren, if this actually happens. Right, so let's jump into the numbers, because like I said, the numbers really kind of confirmed everything. First off, we started out with Tuesday CPI report. The CPI report came in at 0.1 month over month. That is now quite slow. Year over year was less than expected. Was expected to be 4.1. Now it's 4.0. Look at that previous number. The month prior to that, it was 4.9%. So as you can see, inflation is starting to cool off. And then this is the one that got me. That just said, hey, this market is right. The core PPI and the PPI numbers. Take a look at that PPI number, negative 0.3%. So we're going to have deflation happening in some places in the market. And that's why the Fed, when they came out and they said, hey, we're not going to raise rates this time, but they did say we're likely to raise another 1 or 2 times this year. The market had not priced that in. The bond market was saying, hey, we might get a cut by the end of the year. Now the Fed comes out and says, no, 2 more rate hikes. The stock market didn't care. The bond market didn't care. Why didn't they care? Because the underlying economy is stronger than is expected, which is what moves stocks. Take a look at Thursday's reports. Retail sales killed it, up 0.3, supposed to be down. That Empire State Manufacturing Index actually turned around positive. That's the first time that number's been positive in 10 months. Consumer sentiment on Friday, better than expected. So this move that we've seen over the last couple months has really been in anticipation that the Fed is going to be done, that the Fed is winning the fight of inflation, and that the economy is doing better than expected, and especially earnings that just came out this last quarter, especially in tech, were far, far past estimates. So the market had underpriced where the economic growth actually was, and we've now had to rebalance it. Let's take a look at the numbers this week. Dow up 1%, S&P up 2%, NASDAQ up 4%. Small caps can still not catch a bid. This is a market rally that was mostly large cap and mid cap. Small caps are just not participating. Oil's been bouncing up and down around 70, so this was an up week. Gold was flat. Let's take a look at the charts. Now, we've been at a +3 really since we broke out. Once we broke out, we dip back in. You can see high base here, and then we broke out and ran. Let's talk about Friday's candle. Now, look, we all know that the market can't go up every single day. There has to be some days. Just take a look at what happens after big runs, sell-offs, bases, big runs, sell-offs, bases. This candle is saying that, okay, this run is most likely done. We now need to sit through a base or a pullback. Look, this is just technical analysis 101. I mean, even take a look at the move back here in March. We had a couple of days where it backed off, it ran up a little bit more, had a pullback. We just expect there to be a pullback or a base here. I mean, Darren, do you have anything to add to that?
No, there's really nothing to add. I mean, you would expect profit taking. I mean, last week we talked about profit taking here at the end of the month. I think you are going to get some. We called forth the last week of the month. We just might have been our call might have been a week late, might have been a week early. Yeah, but I think you either get some profit taking. I mean, we could go from 367 all the way down to 333, and this would still be a bull market right here. That's how far we've come. That's how far away from the moving averages we've been. We haven't been at the 20-period moving average for nearly 2 months. So that's a good place, right? To take a look at it right there, and it's still an excellent run over the course of a few months. It's just as likely, though, when you look back there in April, where we had a period where we just based for an entire month, we could get that same thing right here. But yeah, there's nothing out there that says we need to be short right now. The market will tell us when to lighten up on the bulls. But yeah, we've got so far to go before we can say that we're bearish. That hey, just look at some theta plays. If you think the market's out of gas, just start looking at theta plays.
Yeah, and if the market is out of gas, that might be true, but the underlying trend is still bullish, and you have to trade what the market is telling you to trade. The market's telling you it still wants to move higher. It might be a little out of gas here. We might get a little pullback or base, but you want to be a buyer of these pullbacks and bases. And just take a look at the cratering of the VIX. The VIX is now down to 14. We haven't been down here for about 2 years, maybe even pre-COVID. I'd have to look at a chart and see when the last time the VIX was down here. It just is showing that people feel very confident at the moment. Do not start thinking, oh, the VIX is low. This means that we're going to have a big blow up. Look, the VIX can be low for an entire year or two. Back in 2018, the VIX was just hanging out at 9 for pretty much the whole year. This is just showing strength, and the people really aren't concerned and not running out there and getting any insurance on their positions. Let's talk about this week. So we've got our market outlook is that we're bullish, but look, we've made a big run. We just came through a quad witching week. Okay, maybe we get a little pulling back, maybe we get a little basing. Look, we might get another up week this week. Regardless of whatever happens, you want to be adding on more bulls than bears. That's just where we are right here in the markets. Next week, we do have the Juneteenth holiday. Markets are going to be closed on Monday, so take a day off, have some celebrations. Let's talk about what happens next week. First thing, we get Powell's speeches in Congress. So on Wednesday, we get it at 10 a.m., and you can see on Thursday, we also get it at 10 a.m. That's pretty much all that's on the calendar for this week. So a very, very quiet week. This is definitely setting up to be a week that to me looks like more of a base than a pullback. Why? There's the absence of any news. We just came through a very heavy week with tons of news and the tons of good news. The market had a run. To me, this just looks like a week that we base. We could maybe pull back 1%, 2%, who knows? I don't see the market having much downward pressure. We could simply float up another percent. That would not surprise me whatsoever. So if you take a look at where we're sitting right here, we've been at this +3 since middle of May. We are at a negative 0.5. So look, we think there's just going to be a slight pullback this week. We said the same thing last week, and the market didn't listen to us. The market did its own thing, which is crazy. And it just went ahead and kept going up. We could go up again this week. If we get pullbacks, you want to be buyers of pullbacks. If you get bases, you want to be buyers of bases. That's just where we are right now in these markets. Now, Darren, did we get a lot of movement in sectors last week?
It was pretty much almost across the board, just a percent or two up. So you had things going from, like, for example, utilities went from a -1 to a 0. Tech, I mean, just ripped everyone's face off. So, I mean, the big movers are what we've thought they were going to be, that we've been at plus, these used to be +2s. All three of these are now at +3s: industrials, consumer, tech, um, and comm services. Materials was the surprising outlier right there. And we're going to see, I mean, that was enough to get it above some moving averages and actually be positive on it. Everything else was, you can see it was pretty uniform, about 1.5% up. So you're going to see that there's going to be two groupings of the sectors: the stuff that's really outperforming and the stuff that's kind of performing. There's not a lot of stuff. I guess there's going to be 3 sectors at a 0, but let's take a look at the individual ones. So you see utilities, went from -1 to a 0, stuck between the moving averages. They're still inverted right here. We tried to break out above that 50 period on Friday, but there was just a lot of selling pressure at the end of the day. And so we're just stuck here. So, I mean, utilities are neither great nor horrible. So there's a lot of stuff in here. I would actually go out and look for the stuff that hasn't moved in the past month and keep playing butterflies on those until they make them, they make a move outside of a channel. I mean, I think that's going to be a good way to play this utility sector. Communication services, +3. This has been one of the strongest ones for a while. We made a lot of fun of communication services in 2022, and it just turned around and said, okay, I'm here to play ball in pretty much all of 2023. So this is at a +3, one of the better looking ones out there. Real estate was at a 0. Now we're at a +1. It barely broke through the top of that base that we made. If you draw a trend line right there, barely broke through. Give it another, it could roll over. I think this one floats up on through, and we're kind of at the beginning of a small uptrend in real estate. Industrials have come really far, really fast, but they still look great. Okay, you go back 2 months, and we were at a 0 or a -1 on industrials, and in short order went from a +1 to a +2 to a +3. There's a lot of money going into industrials, and it really doesn't show much sign of it going back there. You can see for all of June so far, that's just been nothing but money in. I wouldn't even call this parabolic. I mean, that's a fairly good, just straight up linear movement to me. So I mean, there's a lot of stuff that I think there's money going into industrials, and I think money's going to continue to go into industrials. Healthcare was in a 0 last week. We're at a 0 this week. Barely got above that 50 period moving average. Gave most of those gains back. Had a decent week, but it's one of those ones. I mean, it's just been kind of anemic, and I'm going to wait for it. Give me another couple of days, and I could say, okay, we're healthcare is now a +1. But right now, I'm going to treat it as a 0. Financials at a +2, kind of broke out of that 3350 area for the entire sector. So just we're above both the 20 and the 50. The 20 and the 50 are the 20 is above the 50. So there's not as much money going into financials as some of the other sectors, but this is still bullish, +2 on financials. Consumer, again, +3, and this is looking pretty good. You've seen a breakout, and it's been almost a month since we were at that 20 period moving average. Look at how far we've come in that month. So once consumers started catching that bid, there's been money going into it really systematically here. And like I said, I don't think it does not look parabolic to me. It looks more geometric to me. So I think we're going to get a lot more money into consumer at this point. Tech at a +3. We had that little base at the beginning of the month, and money kept pulling right in, right there. So even this is looking pretty good. Those are it's one of the top performing sectors. Look, materials. This one went from a 0 to a +1. Decisively broke out. That's the only problem, though, is we're at the top of a channel right there. Now, can we break through that channel? I think we've got a pretty good chance to do so. You look at Friday's candle, it looks the opposite about everybody else's candle. That long lower shadow, we couldn't break through, but there's still a lot of buying pressure right there. So I think, if the entire, and we're talking the entire sector here, if the entire sector can get over 82, then I think a lot of things start to look pretty attractive. And there's some decent stuff in the materials sector that's been looking good for the past month. Energy, we're to zero, peg between the moving averages, and you can see we're starting to get almost a symmetrical triangle going right there, maybe a little bit of an ascending triangle, depends on how you draw the trend line right there. So which way is this going to go? We saw this, oil, got up to $120 not that long ago. Now we're down at 70. So, I mean, there's a lot of stuff you're going to have to look for. If you're bullish on this, you're going to have to look for stuff that's got, some great efficiencies. And with the cracking spread being so tight right now, it's very hard to find. So just kind of at a wait and see. Or again, we've been playing sideways to slightly bullish, sideways to slightly bearish on a lot of these energy names. I think that's what you have to do when you get something like this. It's just you've got to look for theta and play for theta. So looking at everything, the stuff that looks the worst is only at a zero. There's nothing that looks decisively negative. Energy, utilities, and healthcare. Materials and real estate, mildly bullish at a +1. Financials, a little bit better at +2. The rock stars, though, it's been the same story for the past, or pretty much all of June. Tech, consumer, industrials, and communication services. So let's take a look at a few possible trades right now. So last week we had sideways to short and peak, and that's what it did. I mean, this thing just went. It was down 0.1%. Barely even worth the tape to print that out on. So this is doing exactly what we expected. Sideways to short. I think this is still the way to play it. Right now we're looking at the Southern Company. We're going to play this one sideways to bullish, and you can see we've we're into going back to utilities from real estate. When you do a screen on these two sectors, with the criteria that we look for, you don't come up with a whole lot of suspects. So this is one of those ones that's very hard. You can see we will rotate back and forth between our recommendations, but when you look at the whole thing, you say, "Oh man, I played this like 3 times in the past 3 months." And probably time to change sectors. We're going to go sideways to slightly bullish on this one. I think 73 is a decent target. Not asking it to do a whole lot right here. Play it a butterfly is going to be the way to do it. Just a little bit of a target right there. Asking it to move $1.25. We're not asking it to do a whole lot. I think that's entirely reasonable. And you're going to play this one for about 3 weeks. And communication services. Yeah, last week we were long match and did pretty much what we asked it to. It was up 1.5%. I mean, you can see it started to pull back on Thursday before everything else. So just watch your position. If it expired, for expiration Friday for you, I think you're looking pretty good right there. If you've got another couple weeks on it, put a line in the sand where you say, okay, this trade is broken. Doesn't mean take my profits and preserve capital. So just know what you're going to do with this position. Right now, we're looking at a nice high base, a multi-month high base in Electronic Arts, EA Games, essentially. So what's the way to play this? EA is one of those names that when it moves for a while. So I'd go out to July and go long those 125s and then short next Friday's 130s against it. I think that type of a diagonal is exactly what to do. If you break out, looks like we tried to make that breakout on Friday, just couldn't do it. It was up 0.25%, but gave back a lot of those gains. I think a 5-day trade with a target at 130 is a decent way to go. Then you can reevaluate what you want to do with those long 125s. Okay, healthcare. Last week we were short Moderna, and the entire healthcare sector. We entered at the exact right time, but the entire healthcare sector did catch a bid. So this is one we're sitting on a little bit of a loss on right now. We're at the top of a trend channel though right now. You can see Friday's candle. If this thing rolls back over, we're going to be looking pretty good. But it did move 4% this week. Right now we're looking at Elon PLC. That's ELAN. And this is a nice high base. Broke out on Friday, I would say, from its previous, from the April high right there. And It's one of those ones. It depends on how aggressive you want to be. You can go out to July and play a 10-12 bull call spread, or if you want to get more aggressive, and this is getting to be the market to do it, just go long those 9 calls.
Right. Last week, industrials was our favorite sector. It did awesome, and we still really like it. So we made a trade on Boeing, and the trade we made was a diagonal call spread with the peak at 220. Very rarely can you nail a trade like this, where we wanted it to basically close at 219.99. That was the best thing that could possibly happen. And so that's what it did. That's what it did. So again, that's a max gain point. I know I closed my entire position for a gain. Some people may have left the long calls out there, but this thing still looks really good here on a chart. This week, we are looking at XPO. So this is a shipping company, XPO Logistics, and we do have FedEx that is in a similar pattern, but FedEx has earnings on Tuesday. So I originally thought I want to play FedEx, but I don't want to be messing around with their earnings report. And I'm like, okay, well, let me just go to something else in the industry group that is strong. Found this one. So here we are. We've got a breakout. We did get a red candle on Friday. Fully understand we could easily pull back to the breakout point of 50. That would be very, very normal for this thing to break out, lose a little bit of steam, and come back down all the way back down to 50. So you can wait for that pullback and then be a buyer at 50. Or one of the things I love to do is pull out just a spread and go far enough out to where if it does pull back, it's not that big of a deal going all the way out to July to do the 50-55. This is going to cost you probably right around $2, giving you $3 of upside, and you've got a whole bunch of time to let this thing work. Industrials are looking really good here. Financials were my second favorite sector, and we did another diagonal call spread on JP Morgan. Our target on this one was 142, so it went a little past our max gain point on our diagonal. So on diagonals, we just made a little bit less on that one. The chart still looks great. If you've got the long calls, you can let this thing keep going. You can turn it into another diagonal spread next week. Again, the trade looks really good here if you're still in it. This week, also looking at a long setup, looking at US Bank. In the financials, you've got a group of stocks that got really killed, and these are the regional banks. And they have been very, very late to coming back. And you can see that, the market was rallying up through April, May, and these just didn't. The big question is, are these ready to start getting a bid? And the things that I like to wait for is, are we above a 50-period moving average, and are we holding a 50-period moving average? And I love this price action right here. Now look, I don't think this thing is going to take off and run all the way back up to 46. That is definitely not what I'm saying here. There's still some problems in the regional banking, but the price action to me is saying, okay, it took its punishment. People sat on it. People said, okay, I think we're okay with it. And now we're starting to get some bullish price action. So the question is, how do you play it? I'm going to play it with a diagonal call spread, very short-term one. So go out to July monthlies, the 30s, and sell the 34s, which you can see is just right above. So if this stock does take off this week, I'm going to make a small gain for 5 days. I'm very happy with that. I'll close the trade out. If it takes a little bit longer to move, I sold that 34 to bring in some credit to help me sit through some more sideways price action. So that's US Bank in financials.
On consumer, last week we were long sideways to long on TJ Maxx, and this trade's still looking good. It ran about 2.5%. So depends. I think our midpoint was 80 on there. So we're still probably at a small gain right now. This trade's still looking pretty good. If it rolls back over, it gets down to that 80 mark, we just make a little bit more. Right now, we're looking at BWA Borg Warner, and this is a nice bull flag. So you can see way back in March, we started having we had a great run up in the last part of 2023. and we gave a lot of it back from March till now. And we've got that, but on looks like Wednesday, we broke out of that upper trend line right there. Nice little bull flag pattern right there. We're above, since we're above that trend line, we can say, okay, you get above this right now. This could be the start of a pretty good new uptrend. So let's get in at the very beginning. Two ways to play it: 47.50, 50 bull call spread, or you go out there into July and just do those 45 calls. Either one looks good to me. And in tech, last time we were sideways, short in Texas Instruments. I think we're midpoint of about 175 right there. It had a little bit of about 2 3/4. I'm sorry, about 3.5% up for the week right there. With the rest of the tech sector did pretty much the same thing. Still a little bit. If you take a look at this, Texas Instruments is still underperforming the sector. So if you want to start doing a pairs trade on something, pair something strong with something weak, that might be a pretty good idea. This is still, this is underperforming. I'd be happy to, still play this sideways, slightly bearish. Right now, we're looking at the trade desk TTD, and I don't think we've played this one before, but we're in a nice high base right now, and it looks like we're going to break through that upper channel right there. So how do you play it? I'm going to play this one, go out to the Julys, go along those 70s, and then short next Friday's 77s against it. I think that's the best way to play something like this, because we still haven't broken out right there. If we do break out, reevaluate the trade next Friday. But this is looking. I love playing diagonals on something like this.
In the materials sector, this was one that got promoted, got a little bit more bullish on it. Last week, we had a play on Dow Chemicals to be sideways, and you can see that's pretty much what it did. It went up about 2%, but definitely still nicely within our range that we're looking at. This week, we've been mostly sideways in both materials and energy for, Darren, the last 2 to 3 months. I swear that's all we've been doing in these two sectors. With it getting promoted, I said, okay, let me go out and find, what I thought was the most bullish setup in the entire sector. And this is the one I came with. Now, look, I usually don't chase after these really beaten down stocks because, look, they were beaten down for a reason. And relative strength and weakness, we've shown and seen over the past 25 years in business that the stuff that's getting bought today is the stuff that gets bought tomorrow. And it's the stuff that probably gets bought next week. Trends work. Here, this is a potential start of a new trend. Now, the first thing that has to happen for me is it has to go above a 50-period moving average, which it has. So we just took a look at US Bank, and we kind of had the same setup here, where we had something that had been really beaten down, finally starting to show some bullish price action. This could be the start of a new uptrend, and it might last for a month or 2 or 3 or 6. We don't know. So how are you going to play it? I'm just going to play this with straight calls. About 10% of my trades every year are long calls and long puts. That's it. Everything else is spreads. These are the moments when we have a +3 market and we get a improvement in a sector. These are the only times I go with the aggressive trades, like just buying straight calls. This is one of the few times I really like a trade like this, just straight calls on CF Industries, and give yourself enough time to enjoy the trend if it actually starts this new uptrend. And energy, sorry energy, we are still going to be mostly short or sideways, because you just haven't improved as a sector. So last week we had a slightly bearish butterfly on ExxonMobil, and you can see ExxonMobil went down 2%. This is the exact range we wanted it to be. We wanted it to be right in here, and that's exactly what it's doing. This trade has one more week left to work its way down. That'd be just great if it did. This week, Occidental Petroleum. So this is another one. When you take a look inside this sector, there's some stocks that are going up a little bit, some stocks that are going down a little bit, and some that are neutral. This is one of the ones that's a little bit more weak than strong. So we want to just reflect that. We want to play this just like the stock is telling us. This is likely to go sideways to slightly lower. So how can we play that? Well, we want to do theta stuff. We want to do stuff like bear call spreads, diagonal put spreads. We want to take advantage of getting a little bit of negative delta and a little bit of positive theta and let time do its thing. So I'm going to go with the July 14th 60 and sell the next week 57 put. So again, it's right here, 57. That's going to be our max gain point. So risk graph on a diagonal put spread looks like this. So 57. If we can just get this thing to go down another point, that's going to be max gain for the week. And then you get to decide, do you want to close a whole trade out for your gain, or do you want to hold more of the trade to try to get a little bit more profit out of it? That's the thing we love about these diagonal call and diagonal put spreads. It gives a trader that option on that Friday. That wraps up our trades for the sectors. If you guys have any trades you want to share with the rest of the group, you guys know where to go. Log on to the members area at Maverick Trading. Go into the forum. We love to see our traders working together, helping everyone make some profits. Let's close this up. Markets are bullish. Guess what? If you don't like it, too bad. That's what they are. The markets are bullish. Look, as a trader, I've been doing this now for over 25 years. And during my 25 years in this business, guess what? Sometimes the market goes up and goes up for a while, and then it goes down for a while, and then it goes sideways for a while. Once you have been doing this as long as I have, it's just like waves in the ocean. And no wave is particularly meaningful. They just are waves. Understand that that's where we are in this market. We're in an upwave. Okay, we're in an upwave. Just enjoy it. Enjoy the upwave. And then when the down wave comes, we'll enjoy the down wave, and then the waves will go away, and we'll try to enjoy that. Be very flexible. Remember, your job is not to control and crush the market. Your job is to flow with the market. You want to be flowing with the market. When it's going up, you want to be bullish. When it's going down, you want to be bearish. You're trying to flow with the market. Too many of us use our egos to fight the market, and we're trying to fight it because we think we're right. This market is going to steamroll you. Flow with the market. Whatever the market does, you go with it. And it's very clear. It's been crystal clear for the last 3 weeks that the flow was up. Look, that might change this week. We have no idea. And if it does change, we'll change. We'll just flow with it. So match your trading to the underlying market conditions. That's why we look at sectors and industry groups to really be crafting our trades along with where the markets are actually going. Watch those sectors. Those sectors are really going to help you out in this market. If you are worried that, oh my gosh, I missed this rally and I'm too scared to get into it because it's late, go to the sectors. Hey, what sectors are improving? Materials are improving. Healthcare is improving. Go to those. Those haven't had the big runs that the Qs had. You can find plenty of good trades, and you don't need to buy Tesla. You don't need to buy NVIDIA. There's plenty of good trades out there in some good sectors. Well, that is it for me. Darren, do you have any parting words for everyone?
Nope. Good trade, everyone.
Bye, everyone.